Welcome to this week's Trading Bits and Bytes. I'm Susan Littlefield, and joining us today is going to be Jeff Peterson with Heartland Farm Partners. Going to hit a couple topics like why did USDA decrease the yield so much in the report on Tuesday? Do you think prevent plant acres on corn will increase? And what about prevent plant acres on soybeans? Just a few of the things that we're going to talk to in a variety of different interesting modes for our producers, Jeff. And thanks for taking some time to come in and talk to us today.
You bet. It's always a pleasure.
Let's start with that USDA report. A lot of questions, a lot of concerns, a lot of what ifs in those numbers that came out on Tuesday.
There definitely was, and I think everybody was surprised that USDA did lower the yield so much, and they were happy that they lowered the acres also some. But let's talk a little bit about the yield. And this is our first time we've really had a chance to see how their new model works, going all the way back to when they introduced it back in 2013. So this particular yield model, the weather-adjusted trend, came about because of the 2012 crop, and they said, we need to have a better model. And what it does, it looks at ultimately how far along planting is all the way through the middle of May, and then it also takes a look at what's the June and July precip and temperatures. And what we got a chance to see is that since we were not very far along on the planting, when we came to the middle of May, what that ended up telling us is the fact that they did adjust yield back. They brought it all the way back 10 bushels. And so that was good to see. It was a good chance to see how that model would work under these type of conditions.
A lot of water cooler talk has been prevent plant. Could we see some changes in those corn numbers?
I do. The hard part is going to be when those changes are going to come. So let's first talk about our next opportunity will be the planted acreage report at the end of June. Unfortunately, as we look back, and we've looked back at 2011, 2013, which those were some higher prevent plant years, and then we went all the way back and looked at 1995 and said, what could we expect for changes? And unfortunately, in 2011 and 13, we saw minimal changes from what the prospective planning report was in March all the way to what we ended up seeing in that planted acreage report. Back in 1995, we did see about a 3 million acre change. So our concern would be is as we come into the month, we're afraid that report isn't going to do a very good job of picking up any additional prevent plant acres. So then what that means is that there probably will be a special survey that will be put out. Those special survey numbers won't be available really until the August report, and by that time we'll actually have some FSA data coming out. So it's going to take a while for everybody to be able to get on the same page on this prevent plant, but we do think the acres will go up. We think 7 million acres of prevent plant is very possible.
And it's nice to know that there's going to be a delay because we're in such a need-to-know type of society. To know that we're going to have to wait till August kind of helps us maybe with some marketing plans.
It definitely does. But knowing that, August we'll get the numbers, we'll get some additional numbers in September, and then again in October.
What about soybeans? Is there going to be some prevent plant out there for them?
There is going to be. And in the past, as we look back, 2.2 million is the highest amount we've ever had, and really the main reason for that is we have so much longer to be able to get this crop planted. But as we look at the weather and we look at the calendar, and we especially look at Illinois, Indiana, Ohio, and also look up to South Dakota and parts of Missouri, we would say that yes, there is going to prevent plant. There's going to be a record amount of prevent plant, and I think that's what the market's trying to factor in now. It's trying to make sure that people keep those planters going. As we've dug in and ran the calculations for a lot of these producers, it does make it, and it is an easier decision to take prevent plant on the beans than actually planting the crop.
So for corn, is the high in place, or could we see some higher opportunities coming?
Yeah, so we did set a new high today, high close for this move, but I do think we're going to see higher opportunities down the road. The challenge is going to be is that it won't happen on this run. It's not like we're all of a sudden going to just keep working higher from here this whole time. There's going to be some setbacks that's going to happen, and unfortunately, I think there's a chance that the high may come maybe a little bit later than what many of us may actually be expecting.
So this is kind of an interesting, unique type of year for some of those newer producers. They've never had to, market and think about how they're going to market compared to like some of the older guys who've seen this back in 93, 95. Keeping the emotion out, how do you try to market with all this prevent plant being talked about?
Yeah, I think the good question with that is that you have to go into it saying, how do I go ahead and make good marketing decisions that reduce the risk but still give me choices? And And the way I like to address that, Susan, is that I want to go back to one of our biggest fears, and that's always the fear of missing out on higher prices, right?
Oh, very much so.
And that's going to go ahead and make people apprehensive to sell. But I think the best way to attack this is once you know that you're going to have the actual production, then it's to go ahead and make sales. And don't be afraid of making sales in here, but just make sure you're giving yourself the ability to still get a better price by going ahead and coupling a call with it.
So for corn, could we see December at $5.50?
I think that's a distinct possibility. I don't think it would be hard to do that.
What about soybeans?
Soybeans is a tougher one, and I think we have a chance in here. Could we see soybeans, $9.50 on the November futures, $10 on November futures? It could get to those levels, but what would have to happen in order for that to happen is that we would have to see prevent plant levels into 5 to 6 million acres, which I wouldn't rule out yet, but that's what would have to happen.
So I want to throw this over real quick to the livestock guys as they sit back watching this, knowing that they've got to make maybe some feed purchases down the road. Should they be looking ahead to that?
I definitely would be. I'd be if you've got livestock, especially if you're placing them in feedlot or you're going to need feed down the road, I'd be using the pricing opportunities in here to get yourself some upside protection. So in case that you go down the road and when it's time to buy it, you aren't having to pay those prices. I think that's a great idea.
And speaking of working ahead, we are going to be at harvest eventually. We're going to have some wet grain coming in. There's going to be a lot of input costs going in to dry down that grain. Is this the opportune time, or should they be waiting until July to kind of lock in some of those fuel prices?
Yeah, and that's a good question. I'd go back to their individual supplier. A lot of times they can actually work with their individual supplier to kind of give them a max price contract. And I would encourage them to start looking into that, especially if there's someone who uses a lot of propane or natural gas at harvest for drying, because there very well could be in certain parts of the country. Nebraska might not be too bad, but we've got many other states where that's definitely something they need to consider.
And we keep hearing that Nebraska is the breadbasket of this year's growing season. Things we know in some parts of the state don't look as good, but there's a lot of states that are worse off than Nebraska. There
most definitely is, and I was talking to a friend of mine last night, an agronomist, and that's the thing we were bringing up. We were saying, what it looks like is that even though Nebraska looks really good, there still are definitely problems, but there are many other states that are much, much worse. And those conditions will improve, though. That's the thing that's going to be a little bit of a challenge for us, is that going forward, we hope that the traders, we hope that everyone doesn't forget how late this crop was planted, because the conditions will continue to work higher, even though we may not think they should, but you just give them some sunlight, let them hit that fertilizer, and they definitely can make a big jump.
It's going to make for some interesting marketing times. Thanks so much, Jeff, for joining us today. It is Trading Bits and Bytes. We've got, of course, another look at the markets coming up next week as well. Thanks for joining us.